The Bangladesh Bank Heist, a billion-dollar digital robbery. In February 2016, officials at Bangladesh's central bank faced an unimaginable nightmare. Nearly $1 billion had vanished from their Federal Reserve account overnight. This wasn't a glitch or accounting error. It was the most sophisticated digital bank robbery ever attempted. The attackers didn't brandish guns or plant explosives. Their weapons were lines of code, stolen credentials, and intimate knowledge of the global banking system's weaknesses. They navigated the SWIFT network, the backbone of international finance, with the precision of master thieves who had mapped every corner of the vault. But here's what makes this story truly extraordinary. Despite their meticulous planning, these hackers were foiled not by cutting-edge security systems, but by something absurdly simple. What tiny oversight stopped them from stealing the full $1 billion? And why, years later, has most of the stolen money never been recovered? Let's break down this incredible heist piece by piece. The Bangladesh Bank heist began months before any money moved. In late 2015, employees received seemingly innocent job application emails. Hidden inside, sophisticated malware that gave hackers complete access to the bank's systems. For weeks, they studied how Bangladesh Bank processed international transfers, learning the rhythms, protocols, and security measures they would need to defeat. This wasn't a smash and grab. It was a carefully orchestrated infiltration. Their attack strategy exploited three critical vulnerabilities. First, they identified a dangerous gap in weekend coverage, striking when Bangladesh's offices were closed but New York was still operating. Second, they disabled the printer that produced physical transaction records, eliminating the paper trail. A simple but brilliant move that prevented immediate detection. Third, they deployed custom malware to manipulate the SWIFT messaging system itself, inserting fraudulent transfer requests while hiding evidence of their activity from bank employees' screens. When they executed their plan on February 4, 2016, they sent 35 transfer requests totaling $951 million to the Federal Reserve Bank of New York. What they couldn't anticipate was human intuition. A simple typo where foundation was spelled fandation triggered a manual review at Deutsche Bank, which was routing one of the transfers to Sri Lanka. This spelling error prompted officials to contact Bangladesh Bank for verification, which ultimately exposed the entire scheme. But not before 5 transfers, totaling $101 million, had already slipped through. But who orchestrated this attack? Following a year-long investigation involving multiple cybersecurity firms and the FBI, a shocking culprit was identified: the Lazarus Group, hackers working directly for the North Korean government. This wasn't just cybercrime, it was state-sponsored financial warfare, using the same digital weapons previously deployed against Sony Pictures in 2014. The Bangladesh Bank heist created 3 dramatically different outcomes for everyone involved. For the perpetrators, virtual impunity. Despite the FBI charging North Korean programmer Park Jin-hyuk in connection with the attack, international jurisdiction limits mean he faces no real prospect of arrest. North Korea continues to deny any involvement, while cybersecurity experts warn their financial hacking operations have only grown more sophisticated. For Bangladesh Bank, the fallout was immediate and severe. Governor Atiur Rahman was forced to resign in disgrace, ending his previously distinguished career with a public scandal. Meanwhile, Rizal Commercial Banking Corporation in the Philippines, the bank that processed the stolen funds, faced a record-breaking $21 million fine for compliance failures. Branch manager Maya Santos de Guito was convicted on money laundering charges and sentenced to up to 56 years in prison. Yet the most damaging consequence remains financial. Despite years of international investigation, $66 million of the stolen money has completely vanished after being laundered through Philippine casinos, which at the time were exempt from anti-money laundering regulations. Most significantly, the heist fundamentally reshaped global banking security. SWIFT launched its customer security program, mandating new controls for its 11,000-plus member institutions worldwide. Central banks worldwide underwent emergency security audits and overhauled their transfer authentication protocols. Many implemented multi-factor verification systems specifically designed to prevent similar attacks. And financial regulators closed critical gaps in anti-money laundering laws. The Philippines amended its legislation to bring casinos under regulatory scrutiny specifically because of this case, ending a loophole that had made the perfect laundering vehicle. The Bangladesh bank heist exposes a critical paradox in financial cybersecurity. Sophisticated attacks often succeed by exploiting surprisingly basic vulnerabilities. The most fundamental failure wasn't technical sophistication, but absence of network segmentation. Bangladesh Bank connected their SWIFT terminals directly to the internet without firewall protection, like installing a bank vault with a glass door. This single control would have stopped the attackers before they could access the critical systems. Security experts now recommend multiple layers of isolation for financial transfer systems with no direct connection to external networks. Time zone coordination represents the second critical blind spot in global banking security. The attackers deliberately exploited banking hours differences between Bangladesh and New York, creating a perfect 48-hour window where communication breakdowns were inevitable. Global financial institutions must implement true 24/7 monitoring with emergency protocols that transcend international boundaries, time zones, and weekend operating schedules. Major banks now maintain continuous security operations centers with immediate escalation procedures for suspicious transfers. What's particularly striking is that Federal Reserve officials actually tried to contact Bangladesh Bank about suspicious transfers, but couldn't reach anyone because it was the weekend in Bangladesh. A simple 24/7 emergency contact protocol would have prevented millions in losses. The third and most counterintuitive lesson involves embracing deliberate redundancy. The most effective security measure would have been mandatory verification through multiple independent channels for high-value transfers. A simple requirement for human confirmation via separate communication methods would have immediately flagged these transactions as suspicious. While automation increases efficiency, critical financial systems need built-in friction points where human judgment becomes a feature, not a bug. In fact, the only reason $20 million was recovered was because a banker at Deutsche Bank noticed a spelling error and picked up the phone. This manual check saved what would have been another complete loss. The Bangladesh bank heist teaches us that in our rush to digitize and automate financial systems, we've sometimes forgotten a fundamental truth. The strongest security systems combine technological protections with human oversight. Neither is sufficient alone. Today, Bangladesh Bank's SWIFT system operates behind multiple firewalls, requires multi-person authorization for large transfers, and maintains 24/7 monitoring. These basic but essential controls would have completely prevented the 2016 attack. The question isn't whether another attack will come, it's whether financial institutions worldwide have truly implemented these lessons before the next sophisticated attack arrives. Because in cybersecurity, It's often not the complex vulnerabilities, but the simple oversights that lead to catastrophic breaches. The Bangladesh bank heist wasn't just a crime. It was a wake-up call for the entire global financial system. It demonstrated how vulnerable our increasingly interconnected financial infrastructure can be to determined attackers. While the attack resulted in significant losses, it ultimately strengthened global banking security for everyone. Sometimes, the most valuable lessons come from the most painful experiences. If you work in cybersecurity, finance, or just want to better protect your own digital life, remember these 3 critical lessons. Segment your networks. Implement 24/7 monitoring for critical systems, and create multiple verification channels for high-value transactions. That was it for this episode. Hope you liked the content. Hit subscribe, tap that notification bell, and leave a comment below, telling us which financial crime case you want us to break down next. Because remember, in the world of financial crime, what you don't know can hurt you. Stay safe, stay informed, and we'll see you in the next video.